Thanks for tuning in. I see you're passionate about your future, so we're going to dive right into it. In today's video, I will be finishing the market structure series. So this will be market structure part 2, where we will cover the other two less talked about, overlooked, underrated market structures, so we can actually know what they look like and be aware of them when they are happening, and also how to trade them to the best of our ability. So I'm going to be drawing these out for you manually, so just bear with me. So the first market structure we're actually going to go over looks a little something like this, right? Come to the market, price is going down, price rebounds, goes up, goes back down, right? Kind of looks like this zigzag pattern, goes back up. So it's just kind of bouncing between support and resistance, right? Really look at this. So your support line will be here, right? Let me make this a little thicker for you. So this top line right here will be your support, your resistance, your resistance containing price, pushing price in, pushing price down, right? So that would be your resistance. And also what you have is some support, the floor, pushing price back up, right? Pushing price back up. So we know that support being the floor, price doesn't want to break below, and resistance being the ceiling, price can't break above. It's keeping it contained, keeping it in, pushing it down. So as support is pushing it up and resistance is pushing it down, that causes price to range, right? To range. That's what this market structure is called, a range, right? This isn't consolidation. A lot of traders get consolidation and ranging mixed. This is not consolidation. This is a range, right? And you can see the range. Once you plot out your support and resistance and you see price bouncing in between a range of price, right? A certain range, then you know that's what you have there. And the thing that we must know about ranges, a couple things actually. First of all, a range can be absolutely dangerous. I always tell my students and other traders, I honestly don't even like trading ranges. I would rather have the market to be trending or just some type of movement. But moving side to side like this is kind of like consolidation, because it's letting you know that price doesn't know which way it wants to go. It's very indecisive, which is why it keeps coming down, going up, coming down, going up, because it's indecisive. So I don't want to be trading anywhere up in here where price is indecisive and doesn't even know where it wants to go. How am I going to plot out where it wants to go? I don't control price. You see what I'm saying? So that's something we have to understand as traders, that we don't control price. So if it's indecisive, it's indecisive. We can't force it to go one way or the other if it doesn't want to. And it doesn't want to at this point because the market is ranging. So if you must trade a range, I always try to trade like 1 or 2 points, right? Once I see price coming down and going up at this double top right here, point number 2, you can be taking this sell down to your support, right? Or if you catch it a little late, you can catch point 3 up to point 4. But honestly, that's a little late in the range. I wouldn't even be dealing with it. But if you have to, I would get in there early and get out. I would trade it from your support to your resistance, or maybe a 1-to-1 if that's smaller. And yeah, like I said, just get in and get out. I wouldn't be trading this repeatedly. What some people think is, since they know it's going to continue to bounce, or they think it's going to continue to bounce back and forth, they'll trade every time it touches resistance. They'll sell every time it touches that support. They'll buy. And that's just sloppy and irresponsible, and more leaning towards gambling than actually trading. You understand what I'm saying? So definitely don't want to be gambling. Also, it doesn't have to go and hit every time, right? It doesn't have to go and hit every time to be a range. And what I mean by that, and I'll show you really quickly. We'll go over this really quickly. And this is why you don't want to be trading too late in that range. So something like this could happen, right? Something like this could happen. Now, this might not look like a range, because it's just not so clear cut. It's not so beautiful like the first one, but we have to understand and be flexible with the market because the market isn't perfect. So this is still a range. This is still a range, right? We have a few touches, a couple touches, and price is moving sideways instead of up or down. It's not trending. It's moving sideways. So it's ranging. This is a ranging market. So again, if you get in too early, right, or you even at number one right here trying to catch that to the upside, it can move and fluctuate in between the range. So you could lose at any point if you get in late. Anything could happen, right? It's so many ifs, ands that could happen with a ranging market that it's safer to just stay away from it than trying to figure it out, because price doesn't even have itself figured out at that point. So let's not stress ourselves out. Try to stay away from ranging markets. If you do trade a ranging market, instead of trading the first 2 points, I would rather trade a breakout and retest or something like that. So, or a break of structure. So what a break of structure will look like for a ranging market on this top perfect setup here will look something like this, right? Price continuing to fall. Price continuing to fall below. Excuse me, let me fix this up for you. Price continuing to fall below your support. So it broke structure, because the structure is support, right? This floor. So price was supposed to bounce up, but instead it broke the floor. So now what traders are looking for to happen is something like this, and this is what I will rather trade. They're hoping it comes back, retests that support, which is now resistance, and then gives them some type of play, some type of confluence to get in for the sell to the downside, right? To the downside, because if price is breaking structure, if price is breaking the support structure, that's letting you know that price wants to go to the downside. So as it breaks and comes back up and retests that level, break and retest, right? Break and retest that level, they're looking to get in the trade to the downside. So that's a not really a breakout, but that's a break and retest that you can do, or what a break of structure will look like actually on that structure. And again, if it did come up, it was supposed to stop right here at resistance. But if price continues to keep going, let's see here if price continues to keep going like that, right? Price breaks out of your resistance, breaks out. What traders are hoping for at this point is a retest of the resistance, which now becomes support, give them some type of play action up in here, give them some type of candlestick pattern, doji, to take it to the upside. Because if price is breaking the ceiling, that should be letting you know that price wants to go up. So as it's retesting that resistance, now turns into support, they're hoping it takes off to the upside. So that's what break of structure, or what a break and retest type of setup will look like with a ranging market. The same thing with this one down here. It's nothing different. It's supposed to come up like this, correct? But instead price breaks down, breaking that structure to the downside. Now you might get a retest. Now when you get that retest, it might not come all the way to the line. It might just pull back a little bit like this, and you'll have to understand that that is your retest. That's your pullback into getting into the downside. So this is what it will look like, the same way for the breaking to the upside as well, for the break of structure or the break and retest to get in. But I'd rather trade this break and retest, or like I said, break of structure, than actually trading inside the range. This is so deadly, trading inside the range. So I will leave ranges alone. So that is the market structure with range. A ranging market is moving sideways. Don't get it mixed up with consolidation. Consolidation is something totally different, even though what they do have in common is that price is indecisive and doesn't know which way it wants to go. But the formation is completely different with consolidation and ranging markets. So again, be careful with ranging markets. Very deadly, indecisive, a lot of ifs, ands, and buts, and who knows what inside of that range. So stay away from it, or be very cautious, get in and get out. So the next market structure I actually want to go over with you guys is simply support and resistance, right? You saw in the first video the uptrend and the downtrend. You can get support and resistance off of those levels, your swing lows and swing highs. You see now in this ranging market, you have your support and your resistance right on top and on bottom. So support and resistance shows its face a lot, and it's known about, but it's not respected enough. So what I mean by that is your support and resistance can actually be structure without it being a ranging market, right? One of these without it being a ranging market, and without it trending, without it being an uptrend and a downtrend, creating swing lows and swing highs, you can still have structure of support and resistance, which means that structure can still be broken, right? So what I mean by that, and I try to draw this out for you guys because I'm picturing it better in my head than what I can actually put on here. So let's say we come to the market with C price coming down, right? C price coming down, price heads back up, comes down again, heads back up, right? Breaks that high but doesn't make a double top, right? Comes down, stops right there. Now, this is no formation. This isn't a ranging market. It's not a ranging market because we don't have multiple touches, right? For it to be a ranging market, you have to have multiple touches on top and on bottom. So we just don't have the two touches up top yet. We have the two touches on bottom, but not the one up top, confirming that it is in fact a ranging market. So we just can't call it a ranging market because that's not what it necessarily is. But if you look at it, you can see that we still have a double bottom here. So with there being a double bottom, there is still structure. There's still market structure, because the double bottom right here is letting us know actually a W, whether it's a double bottom or a double top, is a reversal pattern anyway. So it's letting you know that price might want to go to the upside, and it's letting you know, obviously it being support, that price doesn't want to go below this line or below this area. So obviously it's letting you know price is pushing up. So that is market structure without it trending, right? This market isn't trending up. It's not an uptrend. It's not a downtrend. It's not a range. So what is this? This is nothing. Price is just moving. That happens sometimes. You're not going to always come to the market and see an uptrend or a downtrend or, a range, or it's just consolidating or hella liquidity. Sometimes price is just going to move, bro. You know what I'm saying? Sometimes price is just going to move. This isn't anything. This is just price moving. This is no formation. I promise you. Except for this double bottom, which is a reversal pattern, there's nothing else here. But because there is nothing else here, this support is your market structure. So in turn, if this point here, if this comes down and goes below your support, even though this isn't a range trend, uptrend, downtrend, nothing like that, right? Even though it still breaks this little support, that's still a break of structure. That is still a break of structure. I don't know what else you would call that. And a lot of traders don't respect it enough to call it a break of structure, but it absolutely is. It absolutely is a break of structure, because price is letting you know with the reversal pattern and the support, right? The double bottom, that price does not and should not come below this key area. And yet it does. So that is alarming. That is very alarming. So that is still a break of structure. This is what a break of structure with just support or resistance looks like. It's just it breaking that point. And again, it's the same thing though. Traders is hoping it comes up, pulls back, maybe to the resistance at this point that was support, and they're hoping for some type of action up in here, candlestick pattern, confluence, break of candle, to take it to the downside. Why? Because this line, this support, has been broken, letting us know that price wants to go to the downside. There wasn't any major structure like an uptrend, right? And again, I just mapped all these out for you really quickly, just so you can really see what I'm talking about, because that last one with support and resistance is very important. So obviously an uptrend will look like this, right? Creating new highs like that. And a downtrend is the opposite. And a ranging market will look something like this. Equal highs, equal lows, multiple touches, indecisive, doesn't know which way it wants to go. Now, if we just go back and delete the break of structure on this market structure up here, this market structure doesn't look like any of these. This is an uptrend, inverse it for a downtrend. This is a ranging market. This is just price moving. This is just price moving. That's it. That is just price moving. So we have to understand that support and resistance can absolutely be structure, market structure, without it actually being any famous market structure, right? The most popular market structure, like uptrend, downtrend, ranging markets and stuff like that. It doesn't have to be any of that. It can just be a simple support or resistance that should be respected, but it's not being respected. So that's a break of structure, and we need to be seeing what price wants to do. So I really wanted to go over these two market structures with you guys. Like I said, this is the finishing of the series. We went over the uptrend and downtrend in the first video. This video, we're going over the ranging markets, which is it moving sideways, being indecisive. Be very careful with that one. If you have to trade it, try to trade it somewhere in the beginning where you recognize the range is happening. Try not to trade it at the end because it might be exhausted. You might get caught halfway in something like this and it pulls back on you. More than likely, you should just wait for it to pick a direction, which will be in a breakout, because it has to break out of that range to pick a direction. So more than likely just wait for a breakout and then see where you can get in and fit in to go in that direction. But trading this range while price doesn't even know which way it wants to go, I mean, that sounds dangerous every time I say it. I don't know why you would do it. And this right here is just support and resistance, nothing special, no uptrend, downtrend, or ranging. This is just price moving, right? Just price moving. And this is your support, your floor, which should be respected. So if price comes down, wrong one, sorry. If price comes down, it should bounce off this line again, right? And then head up. And just on a pro tip, once it's head up and you have a double top, at this point, you can classify this as a ranging market because you have multiple points. So now you could classify this as a ranging market if price were to stop right here. You know what I mean? But with 3 touches on the bottom side, I can more than likely let you know that price wasn't going to stop there, but continue to the upside. So that's what you have for these two setups. Again, support and resistance can just be market structure. And then you have ranging markets like it moving sideways being indecisive, and uptrend and downtrend. So I really hope that really made sense. Look at all these structures, understand them, realize them when they're happening right before your eyes. As they're forming, get used to, oh, this is a range is forming, right? Oh, this is like an uptrend. You need to be getting this stuff as quick as possible so we can be getting in at the lowest point if it's a buy, or at the highest point if it's a sell. We don't want to be selling too low or buying too high. So in order for that to happen, we have to realize what market structure is being presented to us and how to read it. So if you have any questions, please hit the comments. Let me know. I want to make sure we understand this like the back of our hand. It is a very, very important part of our strategy. Without knowing market structure, you're not going to understand the key areas. You're not going to understand where you are in the market, and you're going to be taking L's that you don't need to take just because you're not understanding market structure. So nail away with the questions. I'm going to answer every single one of them. If you like what we went over, please like, comment, subscribe, share, hit that notification bell. Definitely want to be notified when I drop my next video. A lot of content coming. We've been getting some traction. I really appreciate it. Continue flooding all my other socials. Join the Discord. Hit me on Telegram. DM me, right? Do whatever you need to do to get in contact with me to make sure we're all on the same page for Q1. I can't say that in enough videos. I'm trying to make sure everybody is on the right page for Q1. That's all I got for you guys. I'm Mr. Unorthodox. Keep thinking outside the box. Peace out.